Welcome. Today we have brought one beautiful topic and its title is A Brief History of Stock Market and Stock Exchange. So let's talk about it. A brief history of stock market. The stock market history date back hundreds of years to 13th century Europe, but the US stock market did not become an established part of economic life until much later. During the 18th century, today the performance of various stock market in the US and around the world is used daily to gauge the health of different parts of economy. But the history of stock market is a long winding road with many twists and turns. Key points: the stock market has a long history dating back to 13th century Europe and became established in US during the 18th century. The stock market works by facilitating transactions between buyers and sellers of financial securities. Stock market index such as the Dow Jones Industrial Average and the S&P 500 measures the performance of a specific portion of the market. The US stock market has experienced significant events throughout the history, including crash such as one in 1929. When did the US stock market start? Although the first stock market began in Amsterdam in 1611, the US did not get into the stock market game until the late 1700s. It was then that a small group of merchants made the Buttonwood Tree Agreement. This group of men met daily to buy and sell stocks and bonds, which became the origin of what we know today as the New York Stock Exchange. So, how was it created? The New York Stock Exchange took centuries to become what it is today. In 1817, the Buttonwood traders observed and visited the Philadelphia Merchant Exchange to mimic their exchange model, creating the New York Stock and Exchange Board. The members had a dress code and had to gain a seat in the exchange. They also had to pay a fee, which increased from $25 to $100 by 1837. After the Great Fire of 1835 wiped out 700 buildings in lower Manhattan, Wall Street suffered a significant property loss. Fortunately, Samuel Morse opened a telegraph demonstration office which allowed brokerage to communicate remotely. In 1903, the doors of NYSE opened with hundreds of stock certificates held underground in the World Exchange. The NYSE is the largest stock exchange in the world. Yet there are now exchanges in major cities across the globe trading domestic and international stocks. This includes the London and Tokyo Stock Exchange. Some of the other world's largest exchanges are located in China, India, Canada, Germany, France, and South Africa. Stock market history or timeline: late 1400. Antwerp or modern day Belgium becomes the center of international trade. Merchants buy goods anticipating that price will rise in order to net profit. Some bond trading also occurs. In 1711, the first modern stock trading was created in Amsterdam. The Dutch East India Company is the first publicly traded company, and many years it is the only company with trading activity on the exchange. Late 1700, a small group of merchants made the Button Wood Tree Agreement. The mean meet daily to buy and sell stocks and bonds, a practice that eventually becomes to form the New York Stock Exchange. 1790. 1896, the Dow Jones Industrial Average is created. So, where were stocks first created? The concept of trading goods, which laid the foundation for where stocks were first created, dates back to the earliest civilization. Early business would combine their fund to take ships across the sea to other countries. This transaction way either implemented by trading groups or individuals for thousands of years. Throughout the Middle Ages, merchants assembled in the middle of a town to exchange and trade goods from countries worldwide. Since those merchants were different countries, it was necessary to establish a money exchange so trading transactions were fair. As mentioned, Antwerp or Belgium today became the center for international trade by the end of 1400. It's thought that some merchant will buy goods at a specific price, anticipating the price will rise so they could make a profit. For people who needed to borrow funds, wealthy merchant would lend money at high rates. This merchant will then sell the bonds act, backed by these loans and pay interest to the other people who purchased them. Who invented the stock market? The first stock exchange in the world was created in Amsterdam when the Dutch East India Company was the first publicly traded company. To raise capital, the company decided to sell stock and pay dividend of their shares to investors. So how does the stock market work? The stock market works by pairing buyers and sellers who want to trade financial securities and helping facilitate transactions. Or in other words, a stock exchange or stock market is a physical or digital place where investors can buy and sell the stock or share in publicly traded companies among their securities. More stock market basic. The price of each share is driven by supply and demand as well as investor sentiment. A domestic and global economic trends, investors need to know what they are willing to pay for a security and what the seller is willing to sell it. There are spreads between two prices, but in the end, if the two come to an agreement, security trades end. History of stock market index. As mentioned, the Dow Jones Industrial Average and the S&P 500 index are two of the stock market most famous benchmark or barometers that try to capture the performance of the whole market, even the whole economy. Founded in 1869 and 96 by Charles Dow and Edward Jones, the Dow is price weighted average. That means stocks with higher price per share levels influence the index more than those with lower price. The Dow is made up of 30 large US based stocks. It was designed as a proxy for the overall economy. Why are stock market cycles? What is stock market cycle? Speaking of market being up and down, stocks and the market can fluctuate on any given day. The US stock market has historically gone through larger market cycle in which the market expands and shrinks over the course of weeks or even years. There are typically four stages to market cycle: accumulation, markup, distribution, and the markdown phase, which can also be reflected in the performance of cyclical stocks. The accumulation phase happens when the market is at a low and buyers begins to snap up stocks at discounted price. At the beginning of the markup phase, price have been stable for a while and more buyers start jumping on the bandwagon driving up the price of stock. At the end of this phase, as buyers jump in masse, the market makes a final spike as it nears the top of bubble. During the distribution phase, sentiment becomes mixed, and in the markdown phase, price totally plunges. The tips provided on this video are of general nature and do not take into account your specific objective, financial situation, and needs. You should always consider their appropriateness before any circumstances. So this was the brief history of stock market and stock exchanges. So stock market exists worldwide with major exchanges in cities like London, Tokyo, and Shanghai. First started in Amsterdam 1611. So it was created and it took centuries to become what it is today. So thank you for watching.